Okay, buying your first home, it's a huge milestone, for sure. But let's be totally honest, it can feel pretty intimidating, right? So our goal here is to just demystify the entire thing and turn that overwhelming feeling into pure excitement.
I mean, this is the heart of it, isn't it? That dream of finally stopping those rent payments from just vanishing every month and instead building something that is truly yours. If that's you, you are definitely in the right place. And it really is a journey. There are going to be some twists, some turns, and a whole lot of new words you've never heard before. But don't worry, with the right info and a clear plan, it doesn't have to be stressful at all. Think of this as your personal guide from renter to homeowner.
So before we even think about looking at houses online, we have to start with the most important question of all. Are you financially ready? And this means looking way beyond the sticker price of a house and really understanding what it truly costs to own it. Here it is, the big financial shift. Renting is pretty predictable, right? You've got your rent, your utilities, but owning? Well, that adds a whole new layer of responsibilities like property taxes and homeowner's insurance. And the biggest change of all? Repairs. When that dishwasher breaks, you can't just call the landlord anymore. You are the landlord.
So with all those new costs, you might be asking, why even do it? Well, because every single mortgage payment you make is building equity. You're not just paying for a roof over your head, you're actually investing in an asset that you own.
Look, a lender is going to put your entire financial life under a microscope to decide how much they're willing to lend you. So before you even talk to a bank, the real work starts right here, chipping away at that debt, beefing up your savings, and polishing that credit score as much as you possibly can. This part is absolutely non-negotiable.
Okay, once your finances are looking good, it's time to assemble your team. This whole phase is about getting the professional help you need and, just as important, that financial green light to actually start your search. These 3 steps right here, this is the foundation for your entire home search. You start with an agent to guide you, then you figure out a budget to keep you grounded, and finally, you get that pre-approval to show everyone you're a serious buyer. A great real estate agent is so much more than just someone who unlocks doors. They're your local market expert, your paperwork translator, your chief negotiator, and your strategic advisor when it comes time to put together a winning offer. They are, without a doubt, a vital part of your team. You're going to hear this term thrown around a lot, DTI. All it is your total monthly debt payments, think car loans, credit cards, student loans, divided by your gross monthly income. Lenders use this simple number to figure out if you can actually handle adding a mortgage payment. So what's the magic number? Well, lenders generally want to see a DTI below 50%. That's kind of the benchmark, but honestly, many loans will require an even lower number. The less debt you have, the better you look. Simple as that. Think of pre-qualification like a casual chat. You give a lender some basic info about your finances, stuff you report yourself, and they give you a rough ballpark figure of what you might be able to borrow. It's a nice starting point, but it's not a real commitment. Now, pre-approval. This is the real deal. This is where you fill out a formal application, the lender actually verifies your income and assets, and they run a full credit check. The result isn't a guess. It's a conditional commitment for a specific loan amount. This letter is what makes you a powerful, serious buyer in the eyes of a seller. All right. With your agent by your side and that powerful pre-approval letter in your hand, it is time for the fun part. This is the most exciting phase of the whole process, actually finding your future home and making a move to make it yours. You know, the house hunt today happens everywhere. You'll be scrolling through listings on your phone late at night and then walking through those exact same homes on a Saturday afternoon. This is the moment where the abstract idea of owning a home starts to feel really, really real. You've got to think like a detective here. Look past the fresh paint and the nice furniture. Start asking the big questions. How's the commute? Really? Does the neighborhood actually fit your lifestyle? And remember, no house is going to be perfect. You have to know what you're willing to compromise on ahead of time. So when you finally make an offer, you have to protect yourself. And that's where contingencies come in. They're basically your safety net. They're conditions you write into your offer that let you back out of the deal legally if something goes wrong, like if the inspection reveals a huge problem. Earnest money is basically a good faith deposit to show the seller you're not messing around. It's about putting some skin in the game. It proves you're a committed buyer, not just a window shopper.
Your offer was accepted. Yes, it's a huge moment, but the journey isn't quite over. Now we enter the final stretch, that critical period of due diligence that takes you all the way from an accepted offer to closing day.
People mix these two up all the time. So here's a simple difference. The appraisal is for the lender. Its job is to make sure the house is actually worth the amount of money they're lending you. The inspection, on the other hand, is for you. It's there to uncover any hidden problems before you sign on the dotted line.
Okay, here's a number every first-time buyer absolutely needs to plan for: closing costs. These are all the fees for all the services that get you to the finish line. We're talking lender fees, title insurance, appraisal costs. They typically add up to about 3 to 6% of your total loan amount. So what does that percentage mean in real dollars? Well, on a $200,000 home, your closing costs could be as high as $12,000. And you have to remember, that's cash you need on top of your down payment. You can't forget to budget for this.
And then after all of that, the saving, the searching, the mountains of paperwork, the waiting, you finally make it. You sit down at that closing table, you sign what feels like a million documents, and then you're handed the keys. The house is yours. It's an absolutely incredible feeling, and you earned it.
So there you have it. You now have the complete roadmap from that first financial checkup to the very final signature. The path is clear, so the only question left is the one you have to answer for yourself. What's your first step going to be?